Yeah.
Joining us right now during the conversation is the Strategic Resource Group Managing Director, Burt Flickinger. Burt, it is good to see you this morning.
Great to team up. You and Deirdre, two of the brightest minds in broadcast journalism, perennially working across all countries and continents. And on Macy's, Macy's is now an international brand, Maria. 7th largest retailer online worldwide, and a tremendous dream team of Jeff Gannett, Tony Spring at Bloomingdale's, Bob knows Hell Lawton well from Home Depot. So the Macy's Star Rewards program clicking on all cylinders, capitalizing on the collapse of a number of leading competitors, and as Deirdre referenced well, consumer spending. Macy's has better brands, better products, better locations, and even with the tragedies you reported in California, will be a very strong season for Macy's, and Santa Claus is going to be more pervasive than ever at Macy's this year, and with the parade, Macy's has tremendous momentum.
They are raising guidance as well for the year in terms of what they're expecting, but the stock is really volatile this morning. It was up 4%, now it's basically flat. What are investors reacting to?
The investors are running for the hills in retail. That said, Macy's is one of the few good buys in retail. Particularly, you look at Mornings with Maria reporting all-time highs in off-price, Burlington, Ross, TJX, and Macy's with the off-price initiatives. Last Call, Macy's Backstage, they're just starting off-price, so they're going to win on full line, they're going to win online, they're going to win with off-price. So the stock is one of the few really good values in retail today.
What do we do as those of us that are just average investors? You talk about the retail market. You talk about where should, what advice would you give us? Where should we park our money? We've got 401ks, IRAs, et cetera. We don't want to lose. We've had a tremendous bounce out of the equity market. You hate to give it away. So what should we do?
Great questions, Bob. And I think that the key things, the safe harbors when times get tougher, is always with food. Cornell University with Professor Wendell Earl always taught us that. So Sprouts, symbol SFM, safe harbor, that looks good. And off price, Burlington. Even Ollie's off price. As you've done well throughout your career, it's the Max and Mo Feldberg effect, where you can multiply from regional to multi-regional to national to international. The off-price players, TJX, Ross, all have those opportunities to grow.
But the stock sells off even with good numbers. So I'm wondering if investors are reacting to all of the investment that the company has been doing in terms of investing in a lot of the things that you mentioned. Are their costs going up?
They're investing, and they're not factoring in the rebound brilliance of the softer side of Sears coming back to Macy's, where Arthur Martinez from Saks, Bob Mettler, Meg Rist, Liz Williams completely saved Sears, turned it around in the 90s. That's a $5.5 billion business Macy's is going to get. Many of the analysts have never run anything, never done anything. They don't understand the history, the detail, the rhythm of retail. That business is going to transition to Macy's, and then with the Bon-Ton, the Boscovs, the other liquidations, Steinmart struggling, Penny struggling, Macy's is going to be the primary beneficiary. To Bob's present point, none of that's reflected in the stock today.
Burt, you made the point that Macy's has moved to better products, better brands, more upscale market. As we await Walmart earnings, right? I think tomorrow. Are we now in a situation where upscale is a more profitable business than the lower rings?
Upscale's more profitable, but as Maria and Deirdre were reporting earlier, with oil rolling over a little bit, a big part of the spending is the Russian and the Arabian petro oil sheiks going to the gateway cities in the U.S. and worldwide for luxury. Paris just came off Golden Week and Fashion Week. Good, but not muted. You look at the stock of Hermes and some of the luxury retailers, not as strong as it is. So luxury's still good. Walmart moving from family management, Rob Walton, to professional management, Doug McMillan. Walmart should be particularly strong, with Toys R Us also capitalized, or Target also capitalizing on the Toys R Us bankruptcy. Thank you.
Yeah, it's a shame to see Toys R Us go away. I mean, you could shop for a toy online, you could shop an aisle in Target, but you lose the experience, the exhilaration and the thrill of making the trip and be able to wander the aisle. So I think that's a big miss for the Americans.
Big question, fourth quarter. What are you expecting? Christmas and the holiday shopping season.
Yeah. Fourth quarter not up 5, as some have predicted. Probably not the 4, National Retail Federation, but horseshoe close, probably a 3.2, 3.4. Bob's bringing up key.
What do you say, 3.2 on sales?
3.2 on sales, still break trillion for the first time. Bob's bringing up key points. Macy's has full line of Lego, Hasbro, Mattel, Gund, learning and board games. No other retailers really capitalized on that opportunity. But Bob's key point, too, is the bankruptcy judges and law firms like Keith Phillips in the bankruptcy judge for Toys R Us. In my professional view, that's commercial organized crime by letting the bankruptcy firms loot and gut these companies. Toys R Us should still be viable today. And you look at what Bob Drain's doing with the food retailers.